Hi guys, welcome back to Trademanza's weekly series, the stock market recap. First, I would like to wish all of our viewers a very happy new year and hope this year is going to bring good gains in the stock market for everyone. Secondly, I would like to ask all of you to subscribe to our channel and switch on notifications as we're going to bring you interesting content like this about the stock market every day. Moving on from this, let's get started with our weekly analysis of Nifty. If we take a look at Nifty's daily chart, we can see that it's in a proper downtrend as every swing has been making a lower high and then a lower low. However, the last few candles are looking slightly bullish, and maybe instead of just following a downtrend for now, the market could consolidate in this range of 17,400 and 17,000 for a while. If we switch to a time frame with some moving averages, we can even see that the market has closed above the blue line, which is the 20-day moving average, and is sustaining over there and is trying to give a breakout above the purple line, which is the 50-day moving average as well. If we switch to an hourly time frame, we can see the same thing. It has gone above the moving average and sustained there for a good period of time, even taking support there and shooting up. However, there is a lot of resistance at the 17,400 levels, and the market has reversed from here quite a few times, and this could happen again. But the market would probably be expecting to find support somewhere close to 17,200 or 17,100. If we take a look at the option chain, we can probably see the same thing. The most number of calls are sold at the 17,400 level, indicating that there is very good resistance over here. The number of calls sold at this level are almost double the number of puts sold. And if we look at the 17,200 levels or even the 17,300 levels, we can see that the number of puts sold here are way more than the number of calls sold, indicating that there are buyers ready at 17,200 and 17,300. This shows that maybe for the next week, the market could be in a very tight range of 17,200 and 17,400. Moving on to some important stock news of the week, Nifty Pharma had a very good week. The Nifty Pharma index added 5% in the week gone by. The domestic pharmaceutical companies gained as the Drug Controller General of India approved the COVID 19 pill Molnupiravir for emergency use in the country on Tuesday. Stocks such as Strides Pharma, Aurobindo Pharma, Natco Pharma, and Dr. Reddy's, which are all up 5 to 6% for the week, will be launching the capsule immediately, while other countries are also rolling out their generic versions of the drug shortly. Another Indian pharmaceutical company, Torrent Pharma, announced that it is introducing MSD, which is a trade name of Merck and Company, and Ridgebacks Molnupiravir under the new brand name Molnutor in India. According to the Union Health Minister Mansukh Mandavia, 13 companies in India will reportedly manufacture the drug approved for restricted use under emergency situations for treatments of adult patients with COVID 19. This is an extremely bullish thing for the Indian pharma segment. Moving on to some important bank news of the week. The bank that is in highlights right now is RBL Bank. Rakesh Jhunjhunwala and RK Damani have gone to the RBI with a proposal to buy 10% of the stake in the company. Does this mean that the bank is in trouble? In this week itself, the stock has lost more than 26% of its market cap. The stock has been under pressure ever since Vishwavir Ahuja stepped down as MD and CEO, and the Reserve Bank of India named Yogesh Dayal as an additional director. The shares plunged 10% on Thursday to hit a fresh 52 low week after reports surfaced that the bank wrote off loans worth 300 crore within 7 months of the loans being sanctioned. The stock has made a low of 130, and the 52-week low is 130 as well. The stock is already under an F&O ban from the last few sessions. The domestic brokerage house Motilal Oswal, in its latest report, said that the current developments have raised concern about RBL Bank's ability to sustain a turnaround in its operating performance. As we know, RBL Bank specializes in microfinance and small lending, and these were the sectors which were the worst hit by COVID. So, obviously, asset quality has deteriorated a bit and NPAs have increased. However, RBL Bank allayed customers' fears earlier this week, saying that these developments are not on account of any concern on advances, asset quality, and deposit level of the bank. Even RBI stepped in to address the concerns of depositors and shareholders, saying the private lenders' financial health remains stable and there is no reason for depositors and other stakeholders to react to these speculative reports. The stock has been under pressure ever since Vishwajir Ahuja stepped down. Moving on to some global cues, which were the reasons for the markets being extremely bullish this week. China's industrial profits growth has accelerated in October. The profits in October rose 24.6% from a year earlier to 818 billion yuan, the official data showed, quickening from a 16% gain in September. We can see that there's almost a 50% increase in the profits in the month of September to October. The industrial profit data covers large firms with annual revenues over 20 million yuan from their main operations. The government's efforts to ensure supply and stabilize prices helped companies mitigate difficulties, which in turn helped improve production conditions and profits. This was the main reason, along with the government support, why China's profits have increased. Now, moving on to the next important news, which also kept markets bullish, is that the US jobless claims, even with Omicron on our heads, have been dropping. The initial claims for unemployment benefits dropped to 198,000 for the week, which was 206,000 a week earlier. Even with Omicron on all of our heads, the jobless claims keep dropping, which is an extremely bullish sign for the markets, and the market reacted to this positively as the Dow Jones and S&P 500 both went on to close at all-time highs. Now, moving on to the one thing which is what everyone can talk about, the Omicron variant. The global COVID 19 infections hit a record high over the past 7 day period, the data showed. Every day, the world recorded an average of 900,000 cases as the new Omicron variant raced out of control, keeping workers at home and overwhelming all test centers. And the tally held over 1 million for the second day, which with myriad countries posting new all time highs over the past 24 hours, including the United States, Australia, and many European nations. WHO Director General Tedros Adhanom Ghebreyesus said the circulation of the Delta and Omicron variant of coronavirus was creating a tsunami of cases. Even though the markets are bullish and they seem to be shrugging off Omicron as no big deal, at this time the best strategy would be to be a little bit defensive and keep some cash in hand ready for whenever there is a dip in the market, one can deploy that cash. Countries like India and China are expected to, face a peak of the cases in the month of February, during which we could once again see some correction. So, guys, that's it for our weekly stock market recap. Do subscribe to our channel, switch on notifications, and stay tuned for more interesting content like this. And once again, a happy new year to everyone.